Welcome to the Personal Goodwill Podcast, the podcast that breaks down the valuation of intangible capital for the legal community. Welcome to our first episode. We're streaming live on LinkedIn and YouTube. I'm Jason Soman, a divorce forensic accountant and business valuation analyst here in South Florida. I'm joined by our co-host, Joshua Schiltz, also a forensic accountant and business valuation analyst located in Northeast Florida. Josh is the president of Schiltz CPA. Josh is experienced testifier, business valuation expert, and has testified on personal goodwill issues in federal and state courts. So we decided to do this podcast because Josh and I were talking, and this is an issue that is frequently misunderstood by the legal community as well as the accounting community. And oftentimes, issues of personal goodwill have millions of dollars in implications. In family law cases, which is where I focus my practice, but also in mergers and acquisitions, corporate litigation, and commercial disputes. And I'd be remiss if I didn't mention, a lot of us that are listening here, we are in the business of knowledge, skill, and reputation. So I think there's also a lot of good takeaways here on this podcast for running our own businesses. How do we institutionalize some of the personal goodwill that is tied up in ourselves? So this isn't going to be an every single week podcast, but when we do a podcast, it's going to be diving deep on the issues. And we're not afraid to tackle the tough issues and face them head on. So welcome, Josh. Welcome to the podcast. We're happy to have you here.
Thanks, Jason. No, I'm excited to be here. I mean, as excited as one can get, right? Talking about valuation issues, but I think I got to kudos to you for putting this together. It's a really important topic, and to your point, like I've testified about this primarily in divorce cases. Personal goodwill comes up, and so that's where I think a lot of the topic comes up. But as you know, right, and maybe people don't know, a big thing that I've been doing some research on, and I've talked to you offline about it, is human capital. Um, with the pandemic and everything, I started looking at workforces, and I started looking at demographics of workforce, the age and also the talent of that. And when you start looking at workforces and then you start looking at the buying and selling of businesses, personal goodwill is an important factor in that. I also think that personal goodwill, and we're going to get into the definition of that, but intellectual property, right? And let's forget about it in a litigation sense. You and I run our own businesses. Knowledge, reputation, and skill, that's intellectual property, right? So when you look at businesses like ours or larger scale or businesses, which just means more people on one payroll, but doing the same thing, those are interesting topics that I'm glad you set this up so we can, talk about those things.
Sure. So I guess I'd start off for the listeners. What is goodwill and what is intangible capital? I think before we start going into the details, I think it's important to kind of explain those definitions.
The chicken or the egg, right? To the naysayer, I think it's the chicken or the egg. I think your question is which should we define first? Well, I'm going to define goodwill and then personal goodwill, but only because that's probably what people are familiar with. And then I'm going to talk about intangible assets because, in my opinion, Jason, and I'd love to hear yours, we really need to be focused on intangible assets when we're valuing personal goodwill or any other intangible. So, goodwill, there's tons of definitions out there, but it's the value above the tangible asset value, right? What, in addition to the assets and what those assets produce, creates value above that from a book value perspective. And when it's personal goodwill, um, personal goodwill is defined as the portion of a business's value in excess of tangible net book value that depends on the personal reputation and continued presence of the marital litigant. That comes from an article in Florida family law literature when we talk about personal goodwill. So to me, it's the same thing, goodwill, personal goodwill. It's just how are we allocating, right, that goodwill? I mean, goodwill could be a workforce, it could be a patent, it could be a trade secret, it could be, a customer list, right? I mean, there's a plethora of things. I could walk into my library, I probably have 3 or 4 books about intangible assets and the valuation methods for them, right?
So I guess what you're saying, Josh, is let's say it's just Jason Soman, the accountant. I have a cash account of $100,000. You determine the value of my practice as $200,000. Is it safe to say that the goodwill component is the $100,000 of my
Correct.
practice?
It's the yes, yeah. It's the excess above the cash, the receivables, the debts, whatever it may be. Also recognizing the liabilities associated with that. But um, those
And then
are
my personal goodwill would be a subset of the total goodwill. Is that kind of how it works, or?
potentially, or it could be all the goodwill, right? I think that's where intangible asset identification is so important. I spoke about that on valuation products and services back in December of 22. I'm of the professional opinion that, there is a process and it's already rooted in the literature, Rev Ruling 59 60 at point number 2, that if done right, you're already identifying or potentially identifying what, if any, intangible assets may or may not exist, depending upon industry and specific business characteristics.
Mhm. So you mentioned family law. I guess what's the issue with family law? Why is personal goodwill such a hot topic in family law? And I'd love to hear what your thoughts are on that.
Yeah, my understanding, and I'm not going to give the legal because I'm not a lawyer, but I always think, and I would, if anyone's listening, I would Google double dip family law, personal goodwill, Florida, and you'll find some good articles. But the premises of it is look, when we value a business, and let's say that business has revenue of 200 and expenses of 100, so it's got cash flow then of 100, right? And we capitalize that, and that's what gives us our value. Well, that cash flow of 100, right? That's the revenues represent the products or services. The expenses should represent the costs to make that product or service. And then you have your excess, right? That's your return on investment, return on asset, if you will. That's the cash flow. Now, in family law and divorce, that cash flow figure, when you have a marital litigant that is also a business owner, right? Because of the way that valuations are done for income approaches and market approaches, you could, in essence, double count that cash flow if you use it for support purposes and to calculate the value of the business.
Absolutely. And I also feel like and I think I'm kind of very focused on family law, but I think you kind of opened my eyes a little bit to how this kind of impacts everything. And I know that you're always talking about the aging workforce. And, I think I saw articles as yesterday about how we're going through one of the biggest wealth transfers in history. I mean, there's going to be a ton of businesses that are being sold and purchased. And you know, some of those people may end also getting divorced. So I feel like there's, a lot of these things are kind of intertwined here.
Well, they are,
Um,
Jason, and I think our audience needs to understand it. Like, when people ask me, "Oh, you're an expert witness and you're an advocate," no, man, that's not it. I stick to the science. And when you told me we were going to have this discussion, this is the book I grab when we start talking about intangible assets, and I'll put it up here real close so everyone can see it, and you can also see that. Yeah, I actually read it, but I want to there's some passages here that I think relates to family law. I'm a big one. I guess, in terms of, I work with a lot of attorneys. So I remember Supreme Court. I'm a textualist. Okay. I read the text of the literature, I think that's important. Now, I understand that there's court cases outside of family law. The Martin Ice Cream Company, when you get into estate and gift, is a big one that every practitioner should know about when you're talking about goodwill, right? I mean, that's a big one in estate and gift. But now, I do work in commercial litigations, intellectual property, trade secrets, patents, those types of assets as well too, right? Corporate espionage. And when you do that and you're getting into the values of those things, it's funny when you start working in that and you start seeing, yeah, there's different changes in the verbiage or how we make, but contextually and methodology wise, it's the same. And so I want I just want to read this, if I may, Jason, so
Of course.
everyone can understand it, because I do think it hits home to your point. And, the reason I like Jason Soman is because Jason Soman does disagree with me, which I enjoy. So this is economic basis of intangible assets, right? And yes, this is fair value reporting, but IFRS number 2, and I don't know how deep you want to get into it, but contractual criterion, separability criterion, which is basically saying if you have an intangible asset, a workforce, a trademark, or something of that in this valuation guy's eyes, right? I should be able to separate that, just like if I had a cup that I owned, because I own it contractually, and I should be able to sell that then in a fair market value transaction. Just like if I own Schultz CPA, and guess what? Schultz CPA owns a bunch of computers, and we've decided to dispose of those computers. That and a workforce, yes, I understand the difference between tangible assets and people, but conceptually from valuation, there's not much change. So intangible assets create value for an entity in a number of ways. If intangible assets represent a knowledge advantage through proprietary know how, relationships with important customers, or expertise held by key employees, sound familiar? Then the entity should be able to exploit that knowledge to achieve a competitive advantage in the marketplace. The knowledge advantage becomes an economic advantage through enhanced margins. I think that's important, and I'll tell you why. That's important for what I was talking about, separability. Now, as I read that, right, okay, maybe when you, and the size of a company matters, the location of a company matters, control of the company, all there's a bunch of characteristics that I look at when I'm looking at personal goodwill in the context of divorce, Jason. And we can go through, customer loyalty, there's a bunch of them. But when you start looking at, transactions of, maybe 100-person law firm, or and then that's where the personal goodwill starts to become institutionalized. And that's where you have to look at the entity as a whole, right? I mean, if I go back to that definition, based upon personal reputation, well, I mean, everyone knows that a lawyer is based upon personal reputation. But if you're at White and Case, how much of that has been institutionalized, or Fowler Boggs versus, Sam Smith, PA? So those are things that have to be discussed and analyzed when you're looking at personal goodwill. But ultimately, then, when I go back into family law, there's a second part to that calculation. So after you do that goodwill calculation, right? Let's say I find I'm looking at a CPA office, but they're a part of Deloitte, and I go, they have no personal goodwill into this, right? Well, now you're looking at, well, how are then is this cash flow articulated, right? And is it really an earnings cash flow directly related from the enterprise, or is it directly related for my own production? So I think that sometimes in a divorce setting, we're not looking at, we instead of taking step one, step two, we just kind of go, we'll start with step two, but we're combining it all.
So, and I think that a lot of what I see in the divorce space, and I know that, you and I were speaking, and we both kind of agree that is a lot of misunderstanding of personal goodwill in the family law space. And I feel like, and I don't know if this is your experience as well, but a lot of practitioners kind of look at goodwill as binary, right? Like it's either personal goodwill or it's or it's hard assets. Like how does can you explain whether I imagine there's shades of gray out there, right? Between a business that's 100% personal goodwill and 0% personal goodwill. Maybe you could kind of touch on that and kind of what you see out there in the market.
Yeah, and I think when I hear you talk about that, right? So first of all, personal goodwill or anything, let's understand that it's an intangible asset. I think we can agree upon that, right? Let's also understand that for it to be an asset, it's got to have an economic benefit, right? Now, what is that? Maybe that's a cost savings, maybe that's a revenue enhancer. There's a lot of different ways, I think, to look at an economic benefit for measurement purposes. But now let's talk about what you're saying. And I think what you're talking about is personal goodwill. And, this goes into like a little bit even more about what I'm talking about the institutionalization of potentially personal goodwill or whatever. Is it transferable or is it non-transferable? Right? So that's another component in that step one when you're looking at the the industry characteristics, the business characteristics. Hopefully, while you're going through that analysis, you're identifying, let's look at Schultz CPA. All right. We've identified, yes, we agree Mr. Schultz has personal goodwill in this business. Now, how much of that is transferable? All right. So let's talk about a real world transaction. I mean, and this is why I like this topic. Okay. Because there's going to be a lot of these transactions coming up, right? And for a lot of different businesses and different types of things, but it's still relevant. I mean, we could sit here and we could talk about a CPA firm. We could also talk about some manufacturing plant who's had a key employee for 30 years, okay? But it's all in the same regard. So how much of that is truly, transferable? And then how much of it is non-transferable? And then after I've looked, here's the thing. You got goodwill. Now we've identified personal goodwill. Now, how much of that personal goodwill is what some of the literature calls truly personal goodwill, right? And truly personal goodwill is non-transferable, right? Like there's a lot of people that tell me I have the gift of gab, right? And my mother, God rest her soul, she would probably say, yes, my son doesn't know when to shut his mouth. But my point is, if that brings an economic benefit to my firm and I'm selling my firm, how do I transfer that to, the typical CPA, right? Who, fits into that box or whatever that may be. How do you not talk to that in family law?
Yeah, I mean, can't someone argue that can't we just find another CPA who likes to gab?
I
I
don't
mean,
know.
I
Can
I
you?
I
Here,
I
let
don't
me
know.
put it in this. I was having a discussion with a really well-known healthcare valuation expert about the same topic 2-3 years ago. And he goes, that's an interesting topic. He goes, after valuing hospitals, surgery centers, practices of all different types, he goes, and he goes, normally I'm valuing practices with 20 to and higher ownerships at the professional levels. He goes, for me, personal goodwill was somebody who was separate and apart for it. So he brought up the example because a lot of his work was in New England, in the Boston area, which has a very large medical community. And he goes, there was a lot of people that were a doctor who did this. And he goes, I don't see that as, unique and separate and apart. And I go, well, what do you mean? He goes, because they could go to Boston College, Harvard, they could get somebody to do those surgeries, do those procedures. Yes, I'm not trying to degrade what that person is. And yes, I'm not trying to degrade that person should earn that salary and that compensation, right? But now let's look at where that fits into this organization and the transferability versus he brought up this very famous heart surgeon whose patients weren't even in the New England area. A lot of them were, from Europe and the Middle East and, Los Angeles. He just had patients that was more of a global because he was a surgeon who had developed this one specific niche. And so when he was looking at the team of heart surgeons, he goes, well, that's the personal goodwill. That's the one that I can't transfer. And if I lose that, that's going to have a material impact. So now, and let's push divorce just to the side for a second. I know Jason doesn't like to, but let's say now I'm buying a business or I'm right. There's going to be how many baby boomers selling their business, and it's a unique opportunity for millennials, right? There's tons of discussions about what millennials will do. I was actually listening to a really good podcast about that last night, and so if I'm going to buy that business, right, and goodwill is in that, right, and somebody valued that company, do I want to ask them if I'm going to get the purely non-transferable personal goodwill? And then if so, how am I protecting that? So, it's that domino effect in this thing.
Yeah, and I think you kind of bring up a good point is I think when it comes to the issue of transferability, and I know that this is a hot topic in family law and maybe beyond, but the issue of non-competes, how does a non-compete come into play in personal goodwill, and is that a way that people could transfer goodwill? And I
In
guess
the
how do you
court's
reconcile
views or
that?
in my views?
Well, I think I'd start with your views, because obviously businesses that have some sort of personal goodwill are bought and sold all the time, right? So it's hard to
Yeah,
say.
and it's well written that evidence of if there's a non-compete, that's evidence of personal goodwill, right? I think is the term used, right, Jason?
I believe
Or a
so, yeah.
non-solicitation agreement. So I was on another podcast with a labor and employment attorney and had a really fascinating discussion, and it was about the FTC's proposed rule changes, right, at a federal level to non-compete agreements. Um, I learned a lot about non-compete agreements. First of all, I learned that if we're going to make the assumption that that non-compete is whatever, a transfer of personal goodwill, we should probably understand the enforceability of it, is what this attorney told me. And the statistics about unenforceability were a little eye-opening to me. And, I've seen, and I'm sure you have, a variety of non-compete agreements. And again, I'm not a lawyer, but I've seen some that are one page and I've seen some that are 50. And so I think understanding that enforceability, whether in family law or in a pure, arm's length transaction, is extremely important. Here's the other thing that I learned. Non-competes, when I was sitting with this attorney and she was talking to me about it, and I go, do you consider a non-compete an internal control? And she goes, Josh, I never thought about it that way, but I think you're exactly right. A non-compete is a risk mitigation tool. Okay. So now let's go back to your question. What business am I buying? If you're buying Schultz CPA, right? Is a non-compete important if I'm 72 and I'm done and I got all that in the bank? Or is an employment agreement related to the transferability where we want to spend our time and our money to understand that transaction? You won't know that unless you do that assessment I was talking about earlier. So I think, when we talk about non-competes, I'm starting to view non-competes as a risk mitigation tool and looking at it that way, which is an interesting way to look at it, right? Versus just making that jump that, oh, that's personal goodwill, because we don't want them to compete against it. Well, is it enforceable, right? I mean, the other thing I would say in talking with this legal professional was that I learned is, so the FTC is going to do this at the federal level, but and I think you and I were even talking about it, Jason, offline. Each state and then the jurisdictions on that can trump all those things and present their own challenges. So much like when you're valuing a claim in litigation, anyone who's done statutory fair value litigation, sometimes you have to value a claim. You need to have a legal analysis done of that non-compete to understand its enforceability and applicability.
So our and I think you kind of touched on this before, but like you said, someone 72 who's trying to get out of the business, I think you may look at that very differently as someone who's 32 and may have the wherewithal, the ambition, and the incentive to compete. I mean, how do you look at kind of the I guess I'd call it like the probability of competing and competing successfully in terms of quantifying what that value is and how transferable it is? I mean, maybe you could kind of walk us through that type of
Yeah,
thought process.
yeah. Again, I think you have to step back and so what is that what risk is that non-compete mitigating? I've told you I was an auditor long before I did this stuff. Sarbanes-Oxley, risk and controls. And so I have a control and now I need to link it to my risk. So I like that question. I would really like to, if I was cross-examining somebody, I'd like to ask that. But, you know, you have a non-compete, you're telling me that's personal evidence of personal goodwill, right? So the risk is what? Now let's take that word risk. What? And I'm going to take risk and I'm going to put it together with intangible asset. And you know what I call an intangible asset, an economic benefit. What risk to that economic benefit is mitigated by that agreement? And if you can answer that question and then quantify it, there's your answer. And that's where the applicability of it needs to be discussed.
So I know that in a lot of family law, at least in Florida, and I understand that personal goodwill is an issue, I think, in most states in family law cases throughout the United
Yeah, there's a
States.
lot of states that the issue comes up in.
So I guess the issue of non-compete, because I think a common question that you'll be asked in family law is, did you value this business with or without a non-compete? And you and I know there's a lot of businesses being bought and sold that do have non-competes. Maybe some of them don't have non-competes. So, obviously as business valuators, we would consider those transactions of stock in similar or guideline companies in our valuation. So how does one reconcile the fact that the courts may be requiring us to value this business assuming there is no non-compete with the fact that the data and the analysis in terms of the real world and how businesses are actually bought and sold, how do we reconcile those two, or how do we attempt to reconcile those two?
Well, I hope by our discussion today, where people are learning about that, right? Like, I really do. It's a great question because I think it's, the whole premise of today's episode, right? And so when you value a company using the with or without method and with or without the non compete, but it's really with or without that personal goodwill, right? Again, what risk are we mitigating? You have to answer that question. We assume in a non compete, we're mitigating the risk of competition, right? I mean, that's what it is. Okay, well, what does a competitive factor do with or without this person? And that's what you're looking at in that angle, in my opinion, right? Is you're really showing the court or whoever, if I remove this person, and sometimes we say non-compete, and that's where I think words somewhat overlap, and we need to be careful about that.
Okay. And So I guess uh, you kind of touched on the with or without method, and maybe you could kind of let us like how do you so I know there's the theory, right? And then there's kind of like, well, how do we actually go about it and do these types of things, right? Because I think that's probably one of the hardest parts of our profession, right? Is marrying financial and accounting theory with the real world facts and circumstances on the ground. So, what kind of methods could someone use in order to try to, I guess, bifurcate what portion of this business's value is personal goodwill? And I know you mentioned the with or without method, but what other methods could one consider or use in the valuation?
Before we get into methods, I want to give a shout out to Mike Blake because unfortunately I didn't coin this term, he did, and I think it's a great term. You can't answer the question of personal goodwill doing a desktop valuation. That's his term, desktop valuation. We were having a conversation on a different context, but he utilized that term, desktop valuation. When I see people who go, well, this is how the numbers produce it, right? Uh, I go, that's wow, right? What about the business? Like, do you know how many employees are in the business? Do you know what the people do in the business? Do you know what they sell? Does that make sense in your industry? What you're telling me, right? Like, you can't do a desktop valuation and expect to answer that question. And I think there's probably, look, in the context of family law, there's certain things that as a service provider, we need to provide to our customers. And our customers are the litigant, the attorney, the judge, the jury, the opposing counsel, and the other litigants. Okay? We need to tell them how much the business is worth. And we need to tell them why it's worth that amount at that point in time. And in doing that, you're explaining where they hopefully sit within their market because you have an understanding of their industry and how their business fits within that industry. Is it a small business, a medium business, a large business? Does it rely on overseas processes? Does it rely on IT processes? Is there one employee, 5 employees, 200 employees? Those are all things that are going to dictate, I think, or going to lend in information to that personal goodwill assessment is understanding those types of things. Because to your point, you run valuation methods and approaches. So, what are some different ways to value personal goodwill? We talked about the with or without. That's an income approach method. People have talked about a market approach where if we can somehow get and utilize data from purchase prices allocations, but again there's an assumption that the valuation was done under some preconceived context. I think in an asset approach, the cost to replace and the cost to reproduce is also a very interesting analysis. Let's go back to our famous heart surgeon. What's the cost to replace that? Well, if you can't replace that, now we're talking about non transferable personal goodwill. What if I can replace that? And what if I can replace it rather easily? Right. And I think those are things too. Okay. And then what is that replacement? Going back, how do I replace Josh Schultz within Schultz CPA? Okay, I found somebody that's going to cost me XY. If that new asset can come in and take over that personal goodwill and utilize the existing assets, right? And that brings up a good point, Jason, that I think you brought up earlier let's remember that a business is a combination of assets working together.
So I think you bring up a good point, and I think what you're saying is that it's safe to say that an analysis of personal goodwill is kind of just as much qualitative, if not more qualitative, than quantitative exercise. Is that fair to
It
say?
involves both. You have to do both. I don't see how you do not. I mean, if you want to call economic and industry research and the understanding the subject company's history and its operations, qualitative, yeah, that's it. And by the way, I said it that way because that's what Rev Ruling 59-60 calls it.
Mhm. So I hear a lot about the mum method. It's I think it stands for the multi-attribute utility model. I've
Mm-hmm.
seen it used quite often, and is that maybe you could give your thoughts on what that is and how it's used and how that would kind of come into play with the methods that you described earlier.
Yeah, I mean, it was I think it's a really nice attempt, right, to try and quantify some qualitative things, right, which is necessary. But it can't be the end all be all, especially in what we want to do. Because I'll go back, and again, this is where I remain a textualist. You're valuing an economic benefit. There's some component of economics to that. You should be able to measure that. If you can't, does it exist? And if it is it an asset, right? Like we can assume something's an asset, right? Like I could put my cup on my balance sheet and I could say it's, $15. Is it? Like there's no like Josh, no, it's not. What cash flow does it produce? What money does it save me? So I think there needs to be evidence. And this is, like if you go and read about trade secret and trade secret litigation into that, right? You need to understand the cash flows, the economic benefits. If you go into fair value reporting, those are things. When I value a business, I'm looking at the cash flow, I'm looking at the economic benefits. I'm just now taking that business and looking at individual components. I've always said business valuation is the largest reconciliation that someone has to perform. I was wrong. It's intangible asset valuation that's the largest because now you're taking everything you've done another step.
Sure. And I know there's a lot of court cases that deal with issues of personal goodwill and something that I've learned early on in my career is like, we're not the lawyers and sometimes I feel like issues of personal goodwill are kind of straddling that line of legal versus appraisal. So I guess how do you tend to maintain your neutrality and not give legal advice when you're doing these types of things? Because I mean I have seen a lot of accountants, quoting case law, and to me personally, I feel like that's kind of inappropriate. Um, and it kind of, I don't feel comfortable doing that, but I also want to still be able to perform evaluation in the context of what I'm doing, which is often a family law case or something of that nature. So I guess what techniques do you use, when dealing with complex both legal and appraisal issues to not be an advocate and to not be, you know, kind of how do you stay in your lane, if that's the right saying?
Yeah, no, it is. It is the right lane. And you're right. There's a lot of people that don't know their lanes. And sometimes it's for no fault of their own. I can tell you that earlier in my career, in certain situations, hindsight being 2020, I feel like I was asked in certain situations to um, not be unethical, right? But it was more like, well, this is how the calculation should be done, right? And here's what I would say to anyone who's listening right now that wants to be an expert witness: know your science, okay? Like, know your science. Because when people come and hire me, I don't get asked about wins and losses. That just is something that sits in the imagination of it. I think that there might be a Hall of Fame on wins and losses. I don't know. What's important is defensible and credible. Okay. What's important is and you've heard other people talk about it, maintaining your credibility. How do you maintain your credibility? You stay a textualist, okay? You do what you can do, right? Your job is not to advocate a position. Your job is to run a calculation utilizing certain approaches or methodologies and ensure that, if there are assumptions, those are reasonable assumptions with reasonable certainty. And that's a whole other podcast on reasonable, but that's how I've done it. I've looked at it not from this is my client, this is what we got to achieve. It's here's what the issue is, here's what the text tells you, the case laws tells you, here's what the facts and circumstances are, what they are. Here's what the calculation is. My biggest job is to explain that calculation, that approach, that analysis, how it was done, what was relied on, right? Like all of those things, and then explain what is produced from that. And I think another big job is educating people on the levers. So when you get into personal goodwill, it's educating people on, well, if you're going to take that assumption, that's what this does into that giant reconciliation. So that's how I do it, right, wrong, or indifferent, Jason. I mean, that's just through, anxiety and stress of running my own business. No one told me, oh, this is what you do when an attorney hires you or whatever. I mean, I worked at the big firms, but it wasn't until I stepped out on my own. And yeah, guess what? It's you in that seat. It's no one else. I can't call so and so and wherever that I used to work with. It's me. The report, that's mine. So I know my books inside and out, and I try and know all the facts and circumstances. When I'm only getting fed one side of the story, I go back to my days when I had to investigate fraud, and I triage the allegation. And I try and understand the who, what, where, when, and why of that allegation.
What do you mean by triage? I mean, I know I've heard you talk about that before, but I guess how do you, I mean, I understand the concept, right? But like, how do you do that? Is it through depositions? Is it, management interviews, site visits? Like, what are your tools in your toolkit to kind of do this triage that you talk about? Maybe you could just kind of expand on that.
So when I talk about a triage, and again, this is based on when I used to, work on fraud hotlines and investigate those things. I've invested, I don't even know how many fraud allegations have been in front of my desk, right? And I'm not bragging about that. But one thing I picked up on, and it was a boss that I had who talked to me about it, is, man, when you hear a client say, oh, I think so and so is doing this, or so and so is hiding that, or they are not reporting all of that, right? That's an allegation. Everyone gets really excited. We're like, okay, we got to go and look at this, and we got to get this document. And to your point, do we have to depose everyone? Well, the best way I can explain that is issues management is an analogy, and it's about fishing. So if you're going to go fishing and you've never been at a lake or whatever, and you got two choices of a guide, you only got a few hours, man. You want to, and it's expensive, by the way, to go and fish. This is like a nice lake and all that stuff. You just know that you want to fish. That's all you know. Are you going to go with the person who's just got a cast net and they're just willy nilly throwing it here and there? Or do you want to go with the person who knows exactly what part of the lake at what time of the day and using what type of bait we got to go and do that? And yeah, maybe we can't do that today, but if you come back at X date, we're going to get that done, right? As opposed to the next 3 days, you're with, the first guy just casting things left and right. So when someone brings an allegation into me, it's like, okay, who did this? When did they do this? Where did you see this information? Why would they do this? I go back to the fraud triangle and pressure, right? And this goes into valuations when you're trying to understand operations, operationally, why would this happen, right? When did all of that happen? So I want to understand all those facts and circumstances to understand what is the issue. And, when I used to get a fraud allegation, my boss would say, I need, before you bring this up to me and you tell me we got to do this, you better answer all that in 2 sentences. And it better be material. You go through that exercise, you realize you don't have an allegation, you have a belief. So now, where is that belief coming from? So, when I deal with a client who's emotional, I do that aspect because I just don't want them to spend money. If you're hiring me, you should get ROI on that, right? And so that's where I talk about triaging the issues, as opposed to, all right, I'm going to go and service this client. I'm going to get into it. Man, I got fees into this thing. And now, yeah, I'm hot on the trail. I'm hot on the trail. You as a professional have put yourself in a bad position. So I do everything I can to stay away from that. I just don't see a need to get in there. I don't see the ROI for myself or my clients.
Mm-hmm. And I think that bringing that full circle to personal goodwill, I feel like especially in family law cases, right? There's those allegations of personal goodwill, right? Like I cannot be replaced. Like, obviously sometimes you'll hear a business
No
owner,
one's
oh,
replaceable in their own business,
no one's
right?
replaceable in their own business, or the other
And that
side.
may be true, Jason. Like I think that that holds true. The one thing that I am consistent about over my career is the facts and circumstances for each issue are different. The tools and the methodologies I use, I'm going to employ those based on those facts and circumstances.
Yeah, and I think that kind of extends kind of outside of personal goodwill, and I think that sometimes and that's why I really got excited about this podcast, because I feel like personal goodwill is one of those issues where it's like if you really have a really tough question, sometimes it's really hard to find a solid answer. And if we could have conversations with other people, maybe in similar industries, maybe people who are on the ground, who are dealing with purchases and sales of businesses. For example, the employment lawyer that you spoke with on the AICPA podcast, I feel like we could give people a lot more context and kind of thought processes by which to apply in your case. And I think
Well, and
that,
to your point, right? So let's take personal goodwill, right? Same definition as we've been talking about in a family law context. Let's take it from two angles: the person retiring and then the person starting their business, right? To your point, there's going to be different viewpoints on what that personal goodwill is and what they did. How often do you hear people say, I built the business? You're right, you did. What does that entail? What business? How many hours? Right? What cost? Is it something that I can't just go out and buy right now? Can't I go and buy a CPA firm? You can, right? So those are questions. The unfortunate thing I think sometimes is people see a business, specifically in family law, they think, oh, automatically we're going to have a personal goodwill issue. Not always the case. Not always the case. Going back to what we're talking about as far as personal goodwill, if you're starting a business right now in 2023, or if you've been around for a little bit and you're a millennial or you're in whatever age group, but basically you got to work for another few decades unless that exit plan, which I hear everyone talking about, is around. Start thinking about your personal goodwill in your business. Jason and I talk about that quite a bit in terms of accounting firms and specifically forensic and valuation departments or niche firms that focus on that. And if you, what are you doing to monetize that personal goodwill is a conversation that Jason and I have had, right? And I've had it with other clients, and I'm sure you have too, Jason. Like, hey, man, I think you got a really good business. And it's so funny. The podcast I was listening to last night, and I'll get the note for you, Jason. It's some doctor, but he had a caller on, and the guy had left corporate America in 2008, was in the west coast of Florida, and started buying up like specialty trade businesses, and had done a really good, plumbers, electricians, those kind of things, and built it up. And they were talking about how, as parents, we're trying to get people to be doctors and lawyers, but the trades are equally important, right? And and so I started thinking about that, and if like this guy, what he was talking about was there's no one who knows how to run these companies. All these guys are leaving, so now maybe he's got a premium on that. So if I'm him, and the plan is, look, there's how many millions of baby boomers retiring in these types of businesses. So we're going to take all that personal goodwill knowledge and we're going to institutional knowledge that to you. So now that creates a different business in 5, 10 years from an exit plan perspective. And I think personal goodwill in 2023 is important because of specifically what we're doing right here, right now, between you and I. This is as much personal goodwill that we can do, but we're not just letting it sit on the side, I mean, no, maybe we're not putting it in a book or writing a blog post, but this is how the information and the knowledge is shared nowadays. So how do these digital assets become economic benefits?
Absolutely. So
Subscription, or is it, future cases, or maybe it's not a benefit and we find out that both you and I are done and we're going to have to go and tell our wives and figure out something else to do, right?
yeah, and I think about this all the time, right? Because as professionals, we want to leave something to our families, right? And as business valuation analysts, it's, these are the types of issues that we look at, and then we kind of have to look in the mirror at our
Well,
own businesses.
and we got a unique vantage point, brother. I
Mhm.
mean, we get to look at our mentors leave, and we've seen it for the last few years, and we're watching it for the next few years. And I don't know about you, but what I've seen is opportunities for things to maybe be done differently and better on the next go around. And so that's what I'm trying to pick up. And then I'm also looking at, if you run a professional services business, right, your workforce and that human capital, that can become part of your personal goodwill in some respects too. So how is now you're taking all of those individual personal goodwills and creating some sort of a asset of economic benefit from that? And then is that transferable?
Mhm.
I
And I
think that's
imagine,
always the biggest thing, Jason,
mhm.
like, is it transferable?
Yeah, and I imagine potential legislation regarding non-compete agreements is really going to shake up what was done in the past versus, what's done in the future. And that said, I'm really excited to be, starting this podcast with you, Josh, and I think we're really going to dive deep, and this is going to be really, you know, deep cuts of information specific to personal goodwill. The podcast is going to be wherever you get your podcasts. It's going to be on Apple, Spotify, um, Google, wherever you need it. And I guess what other types of things you think would make good future episodes? And I encourage anyone listening
Well,
to drop
I want to,
stuff in the comments.
I'd like to say one thing that I learned, and it goes to my topic about those who are running businesses right now. Non-competes are mitigation tools, but there are other tools that you can utilize in your business. Data security tools are extremely important. How are you protecting all the data, right, that you use? Customer data, case data, right? Maybe there's formats, all of that stuff. That's valuable stuff. What other internal controls can a business owner put in place to prevent the ill effects of competition? So, if the non compete is to protect the business from you or them leaving, you or I leaving them, right? Well, hopefully that business didn't rely on us that much. And if that business did, and you value that non compete that much, what kind of an operation do we really have at that point too? So again, these things you got to look at north, south, east, west. But if you know the piece of advice I got from that attorney was you need to start looking at your internal controls and recognizing what risks face us. And if I'm buying your company and you're telling me the secret sauce is in here, well, let's understand that, because if the secret sauce can't be transferred, then I can't buy your company. I'll buy assets of your company. And I think the buyer and the seller in future transactions all need to be um, educated on that. So the deals don't fall apart and go into litigation, right?
Hmm.
How many
Yeah,
of
I mean,
those happen? Like where we see a purchase price allocation, we see a deal that was done, and then, oh, hey, I bought this and it's not what this is. Well, did you buy this? Did you, you know?
yeah, I
So
mean, I imagine there's a lot of people who have buyer's remorse for a business that they purchased, and then once they're in the business, they realize that all of that goodwill was really tied up in the prior owner, and they really didn't buy much, and they may have overpaid, and maybe they're going to decide to litigate.
I think that you got to look at all businesses, right? And it's on two sides of the coin here. What are you telling me am I going to buy, and then what am I actually buying, right? And you can put that then in commercial litigation, family law, M&A, gift and estate, and that'll answer, that'll answer the majority of the question. There might be some minutia as it relates to that specific instance, but that'll get 85% of it answered, I bet you.
Hmm. So, Josh, if people want to reach out to you and continue the conversation about personal goodwill, or want to hire you and your firm to do this type of analysis, where can we reach you? I'll put in the show notes, but figured I'd give you the opportunity.
Sure. So, I mean, we practice not only throughout the state of Florida, but we service clients now throughout the country, really, because of Zoom and a lot of different things. Best place to find out more about us is www.schiltzcpa.com. We got some changes going on with that website. If you have any questions or whatever, please look me up on LinkedIn and reach out to me directly there. And if you're somebody who needs a consultation, what I would do is, you can fill out one of our forms online, or you can email info@schiltzcpa.com, and either one of my team members will get back to you so we can set up something to talk about your situation.
Absolutely. And this is kind of just the beginning, guys. We're going to go a lot
Yeah.
deeper in this. We own personalgoodwill.com. So, and personalgoodwillvaluation.com. I can't believe everyone just left it open for us, but we were very fortunate to get those domain names. And I think the podcast is just the start. I think we're going to try to build these intangible assets in terms of being a real resource for the legal community, in terms of articles, presentations, podcasts, blogs, things of that nature, and maybe things that don't even exist yet, maybe methodologies, templates, tools. I mean, I think this is just the
How is
beginning, and
artificial intelligence going to impact personal goodwill?
I think that's huge, Josh, because I think that a lot of what I'm doing today in my day-to-day role could end up being replaced by artificial intelligence. And if I could come up with a way to use artificial intelligence to make our jobs, to, like you said, a revenue benefit, cost benefit, so on and
So
so
you're
forth.
saying, see, now that's interesting, because you look at artificial intelligence, and what I'm hearing you is it's going to strengthen my personal goodwill.
No, because I think that if I could develop artificial intelligence and teach what I know, or what I could do, or what you could do, so on and so forth, into a proprietary format, that's to me that looks like enterprise goodwill, right? Because I could buy and sell that, and I think that is the big opportunity here. And I think I'll finish on this note. I think that's the big opportunity here in terms of our profession, in terms of institutionalizing our knowledge, and making it something that's transferable and that many other people could use other than us. And I'm excited to take this journey, and look forward to having the listeners take this journey with us. And you can find us on personalgoodwill.com. That website will be up later today. And if you'd like to learn more about me and my firm, please visit us at www.divorceforensicaccountant.com. And signing off. Thank
Take
you.
care, all.